Market's been up for the last month. You're saying that that's a time that you'd be stepping back, maybe selling?
Exactly. Hey, Becky. Obviously we've gotten a very bullish bounce in the stock market. And I think stocks have gotten a little ahead of themselves in terms of going, from pricing peak inflation to a soft landing, right? So yes, we have probably seen, the highs in headline inflation, but the key question remains, how quickly can the Fed bring inflation back down to target? And I'm not so sure that it's going to happen quickly and painlessly. And that's, and if judging by the reaction in the stock market, stocks are right now pricing in a soft landing, so no recession. And to me, the price action really stands out if you look across other asset classes, right? So if you look at commodities as a broad complex, they're still pretty weak. Oil sub $90. It's not a market that's telling you that, growth is really going to rebound. And then moreover, if you look at the bond market, the yield curve keeps inverting. Again, that's a danger sign. And that's why, I'm a little cautious over here.
One thing we watch so closely, though, is volatility levels. And the VIX has come back down. You're talking about, I think, sub-20 levels for the first time since when? April?
Yeah, exactly. So we've seen a very significant normalization in index volatility. But if you look kind of underneath the index surface, what stands out actually right now is volatility at the single stock level still remains fairly elevated, right? So the average stock trading about 10 points higher than the VIX in terms of volatility. So what that means in terms of setup, actually, I think, given our more cautious view, I think this is actually a really great time to be looking at overwriting your portfolio. So if you're a long-term investor and you want to hold on to the stocks that you own, I think, take advantage of the elevated single stock volatility, sell some calls against those stocks, right? The risk of that position, obviously, is, if we get a rip higher, the upside is going to be limited. But if we kind of sell off from here, you're reducing your risk, you're taking in some premium, and you're, taking advantage of the very elevated levels of single stock volatility that we're currently seeing.
I know you track hedging flows, like how people are kind of preparing themselves, and that tells us a lot. What have you seen lately?
Sure. So very interesting, actually, is in the derivatives market, we have not seen a lot of upside chasing on this latest move higher. If anything, we've seen actually a pretty notable pickup in hedging. So I do think, at least in the options market, investors remain very skeptical of this rally. So we've seen people come in buying, put spreads at the index level, S&P, Russell, NASDAQ. And that, to me, again, stands out against the price action that we're seeing in the market.
So what would be your biggest concern at this point? What do you think would set the market back off in a different direction?
So to me, what I'm watching very closely is core inflation versus headline inflation, right? So I do think headline has peaked. Commodity prices are obviously lower. That's going to really help that headline number. But if you look at core inflation, a bulk of that is coming from housing, it's coming from rents, and that's not slowing anytime soon, or at least, that's not turning negative anytime soon. And we're not going to see that until we see, significant labor market weakness. So to me, I think, the Fed cannot afford to take its foot off the gas pedal until we see, significant weakening in core inflation. And in my view, I don't think that's going to happen anytime soon.